So welcome everyone to our Story Trading Discover the Story series. It's all about the philosophy of story trading, about our view on efficient markets and how to trade based on the four pillars of fundamental, sentiment, catalysts, and technicals. We already went into the idea of story charting, which basically says that when you look at a chart, it tells you all the information there is about what's going on, why a stock is going up, why it's going down. Being able to annotate charts based on information such as catalysts, changes in sentiment and fundamentals, and being able to, again, understand and visualize that price action to help you make better trading and investment decisions. So that's the concept behind story trading, to understand everything holistically, right? So basically all information is in the price. So any stock you pick at any price, you can look at that and say, that's a combination of fundamental, sentiment, catalysts, and technicals setting that price today. And that price makes sense. That price is rational. That price is explainable. It explains direction of stocks, why stocks go up and down. And it also explains undervaluations and overvaluations of stocks. But what do we even mean by under and overvaluations? What's the reference point? What is fair valuation? And that's where fundamentals comes in. So fundamentals is one of the four pillars. You know, in the past, I've been trading for 25 years. At different times, I've been sorry, yeah, a little bit of a issue here with Jared's tech. Okay, great. So yeah, at different times, I've been a pure technical trader. I've been a pure fundamental investor. I've been a pure catalyst headline trader. I've tried all of these, and none of them work alone, right? And I know that pure fundamental investors sometimes have a pretty elitist view that they're right, and everyone else is wrong, and this is the only way to invest. But I figured they're wrong too, even though they may be more academic, they may be more, educated. They may look at things again more quantitatively, which maybe that makes them feel smarter, whatever it is. But I've observed that people who are pure fundamental investors are not really better off trading in the market than people who are technical traders or catalyst traders. Maybe over a long term, they may do better. But as far as trading goes, it's not really going to give you an edge unless you look at everything holistically. And that's where the four pillars comes in. So you combine fundamentals, sentiment, catalysts, and technicals. And it's a real interesting question when you are making a thesis on a trade or an investment. Which is the most important of those four pillars? And we've talked about this in our previous two programs on catalysts and on sentiment. And on each of those, I think you can make an argument, that sentiment's the most important. I think you can make an argument that catalysts are the most important. And in fact, we'll add John in case you want to speak later. No, remove from this. Sorry about that. Oh, you're already a speaker. You accepted it. So, so the question is, at times in the past, we had said within our community that, hey, fundamentals is the most important thing. We have said that. But I've also been known to say catalysts and sentiment are the most important thing. So that's the question. And, again, I think you can make an argument for all of them, because really the truth is they're all important. That's what it's about, looking at things holistically to understand the big picture of a stock. But just because we're saying fundamentals is in a way could be as important as sentiment or catalyst doesn't mean you throw away fundamentals. Doesn't cheapen fundamentals. It is very important, right? It is very important. So when you're looking for now, it depends what your perspective is, like outlook is on a trade. Are you just doing it as a day trade? I tend to, when I do very short-term trades, which I do with about 10% of my money, I don't look at fundamentals too much. For 90% of my money, I do look at fundamentals as an important factor. So, so basically, going from that. Actually, Jared, before we go on the next topic in terms of how do you define fundamentals and what we even mean by that, give us your thoughts in terms of how fundamentals fit into the four pillars.
Well, I think that fundamentals kind of need to be applied in combination with one of the other four pillars. Because I was thinking a little bit about this question about which of the four pillars is the most important. And I think you could do a purely technical trade, like if you were looking at something like a cryptocurrency or something, right? You could do a trade that was purely based on catalysts, like a biotech thing. You could do a trade that was all about sentiment, like DWAC. It's hard to imagine only having fundamental information. That's it. That's the only piece of the puzzle you have, and being able to execute the trade completely on its own. Because there's going to be other factors that you're going to want to consider. So I think in that sense, it's sort of the pillar that's the most reliant on having another pillar, I guess is the right way to look at it.
Okay, cool. Appreciate that view. And how often do fundamentals change, by the way? Fundamentals many times only are really changing once every quarter when the company
Mm-hmm.
reports their earnings and revenue. In the meantime, the stock has a lot of volatility going up and down. So how do you take advantage of that? What's moving at the stock? And it's really what's moving the stock in between these quarters are catalyst, sentiment, and technical. So you really can't, I don't think, trade without looking at these other pillars. But so we're here to help the fundamental investors, those pure traders that just look at the numbers. They're looking at a DCF analysis. They're looking at the PE ratio, and that's all they're investing in. We want to help them out because if they invest in something that's undervalued, they may be undervalued for months or years or a long time. And if they're short selling something that's overvalued, it might stay overvalued forever. So we're trying to fill in the blanks so we can understand how fundamentals fits into all of this. So now, what do we even mean by fundamentals? Um, I think there's an argument to be made that we separated out at story trading sentiment from fundamentals, but I think there's some aspects of sentiment which is fundamentals. But the way we do it at story trading is everything that's quantitative, like financial data, we call that fundamentals, and everything that's qualitative about fundamentals, right? Such as your opinion on management, your opinion on the sector, your bullishness or bearishness a longer term. We call that sentiment, right? So, but technically speaking, I've heard people say, hey, that's part of fundamentals too, is who is management, what's the product, what's their competitive advantage. That's also the fundamentals of the business. And I guess you could say that, but I think for practical purposes, other people out there, if you want to, collaborate with people and communicate with the world, most people out there think of fundamentals as just that financial data. So that's why we separate it out and we say fundamentals is the quantitative portion of that. So, with that being said, I want to point out for those people who think that a stock should be trading just based on its quantitative value, just based on its PE ratio or its DCF derived value or its PEG ratio or its EV to sales ratio, whatever they're looking at for fair valuation, what I want to say to them is, I think there's a lot of qualitative factors that go into all of that. I've looked at analyst reports, and when you look at the wording in an analyst report, there are a lot of qualitative words in there, and there's a lot of assumptions in there there's a lot of speculation in there, and there's a lot of arbitrary reducing. Basically say, hey, here's a PE of whatever. We're applying a PE of 20 that's based on their peers, but we're discounting it by $5 because there's trust issues with management. I've seen that in there, and that's a purely arbitrary way to take qualitative information and then discount it, right? So, Jared, what are your thoughts here on financials, quantitative versus qualitative, and really defining what fundamentals are?
Well, I think that if you say that there's issues with management, I would actually consider that to be is part of the sentiment pillar rather than the fundamental pillar, because management isn't really like you have an opinion about whether management is good or bad. But I do think that even if you were to push that to the side, there are definitely some other issues. So, for example, one of the things that you can talk about is you can say, okay, is there, is there a warrant overhang? Is there convertible debt? Um, is you know, are we in a rising rate environment? Whatever. There are a lot of questions that you can ask about a balance sheet that are hard to put into a spreadsheet and simply say, how much is this important? If the company has a lot of debt, and has, it's paying a lot of interest on that debt, how important is that to you versus other factors? The person that's making the spreadsheet has to sort of decide that as an opinion. So even if you just have numbers, the decision of like how important is debt versus how important is growth, how important is margins, it's always a qualitative decision how much weight you give each set of numbers in each unique set of circumstances.
Yep. Okay, great. Absolutely. I want to move on to what kind of like financial metrics we're looking at when we talk about fundamentals. And you brought up the balance sheet and the debt. And I actually think, at least the way I use fundamentals, this is one of the most important things you could look at. Because when I invest or trade, I want to protect from downside, and I want to protect from really bad surprises. And the worst surprises you can get, especially if you're investing in micro caps, are toxic financings, surprise financings, where they're raising so much money at a big discount and there's warrants. And to avoid that, you got to look at how much cash they have, how much debt they have, what the corporate structure, the capital structure is, how many shares outstanding, how many warrants may be out there. That's one of the most important things. And I've really incorporated that a lot into my trading. So a lot of traders out there, they're not looking at this stuff at all, right? Especially sentiment and catalyst traders. And I really encourage you that, at the minimal level, if you bring in fundamentals, if you want to bring in the four pillars into your trading, that's the first thing you should look at. Cash, debt. Oh, by the way, also their cash burn rate, to kind of estimate, how soon will they need an offering. And, if the company is going to need money within like 3 quarters or less, right? Man, you might want to stay away, especially if they're losing money. Basically, it's not a profitable business. They're really losing money, and they only have 3 quarters of cash or less. I tend to avoid those businesses, and this has been the most important contribution to my trading. Has been just looking at that. I don't go so deep into fundamentals personally. I don't go into the DCF analysis. I don't go into the nitty gritty of everything, but I do want to know that piece of information. Personally, that's been the most important. And the other thing, obviously, is you do want to get a sense of what the fundamentalists think fair value is, right? Whether that's, again, using PE ratios or EV to sales ratios or DCF, and say, hey, here's the stock, and the fundamentalists think that this is worth $20, right? And whatever, let's say the stock is $7 now, or it's 30, whatever it is, but you have a frame of reference. This is what's really important when I trade. You have a frame of reference that, hey, the fundamentals think the stock is worth X, right? To me, that doesn't mean the stock is worth X at all, right? But it's a frame of reference to then apply other things to it. Now look at the sentiment, now look at the catalyst, now look at the technicals, right? And then apply premiums or discounts to that quote unquote fair value. And that's really how I look at fundamentals. Those are the two things. So take that, again, that valuation that people say is quote unquote fair value, and also look at that balance sheet and the capital structure. And this has really radically improved my performance over the last several years by doing that.
Yeah, that I definitely think that that's very important. I think that it's important to sort of remember, like, it's important when you mention downside protection that that's not just being a conservative investor, that's just being a smart investor. Because if you have like a 50% drop, it takes like 100% gain to get back to even.
Yep.
So yeah, reducing downside is so important for improving your rate of compounding.
Yeah, especially in a market like this. At least I personally, I saw this kind of correction coming about 5, 6 weeks ago, and I warned a lot of people in my community. And what I did, I started selling stocks that were more speculative fundamentally, that they weren't profitable yet. And as a result, I was left with a portfolio more concentrated in profitable companies. And for example, today, two of my stocks, one was up 10%, VTSI, another Gaia was up 5%, which to be fair, it's performed very bad in the last few months, but it seems to have hit a bottom because the fundamentals are there and the cash flow is there and the earnings are there. So that's another way. I think people are getting killed right now in the market because they have a high exposure to quote unquote growth stocks or speculative stocks, which are not making money, right? So this is the other benefit of incorporating the four pillars is you'll have a safer mix of stocks to overperform. Now, by the way, I'm not making money today. My account's down, but it's down less than the average, the indices, because of contributions from stocks like VTSI and Gaia. And that's all you need to do, right? In a market like this, you just want to outperform. That's it. That should be your goal. Your goal shouldn't be, I always want to make money. The goal should be, I need to do better than everyone else, especially in a market downturn, because that's how you make a lot of money longer term, right? Let's say we
Yeah.
go through an extended bear market here over the next few months, theoretically, where everything is down 30, 40%, but you're only down 15%, right? When things start turning around, you have a lot more capital than everyone else. And when things start going green, by the way, you're in solid companies. They have a better chance to outperform anyway once things start going green. So, that's super, super important to consider fundamentals in your trade decisions and investment decisions.
I was actually up 1% today
Oh,
because
wow.
I had a bunch of
Nice.
calls in QB, my favorite bank stock,
Cool.
and that did really well. I was really surprised. Sometimes this is the thing that's so frustrating to me is that sometimes the thing about fundamentals is that people aren't necessarily as interested as you think they should be. So QB had really good numbers in Q3, and they went up a bit, but not quite as much as I wanted. Today they announced, oh yeah, we rebranded our website. It looks a lot nicer now. We have like videos and stuff. They put out a press release just about redoing their website, and I was like, does anyone really care about that? Stock goes up 8%. I was
Wow.
just like, ah, okay.
Interesting. Well, good job. I know you're pretty well diversified investor. You got all these other interesting financials and things in your portfolio. That's pretty good. So congratulations on that.
Yeah, that has a PE of like 6.8. So yeah, it's pretty much in line with what we talked about it just now about the cheap fundamental stuff.
Yeah. All right. So, that's major things I had on here in my list. Anything else you wanted to talk about regarding fundamentals, Jared?
Let me go through the thing here. Okay, yeah, I had a question is what is the best way to find stocks with good fundamentals?
Hmm. Well, that's a good question. I mean, I find them through a community. In the VIP community at Story Trading, people pose stocks and we vet them. I use a tool called Y charts. I love it, man. Y charts allows you to plot fundamentals over time, which you can't really get with free resources so easily. Um, and on Y charts, you can plot revenue over time, you can plot earnings, you can plot valuation metrics such as EV to sales ratios and PE ratios. And I just love to see that trend over time. Particularly, I like to pull back and look at the big picture, 5 years, 10 years max, whatever's available. I'm also looking at things like how often does this company dilute? What's their
Mhm.
cash balance over a long period of time? What's their outstanding shares over a long period of time? Um, so that's what I do now. When I was on my own, you gotta whatever you see what's trending on stock Twitter, use a stock screener on Yahoo Finance. Like that's what I used to do on my own. But now in the community, we get different ideas from different people, and then I'll go ahead and vet them with through those tools like Y charts and through my peers, like I do with you, Jared.
Okay.
How do you do it?
Yeah. I usually try to look through screeners, but unfortunately, one of the things that I have found is very frustrating is that lots of times when you try to find a stock with good fundamentals, there can be stuff that kind of interferes with like there's a lot of like hidden stuff you have to look for. So I'll give you an example. let's just say that you're primarily looking at micro-cap companies and you're trying to find a company that had a big EPS gain this year because that's a sign of, it's improving business or something. Well, one of the things that you have to keep in mind is that we had these PPP loans, right? And they're being recognized as benefits when they are forgiven. So a lot of microcap companies are just reporting like, oh, we got an extra 3 million in profits that we didn't have last year. And when you dig down, that's just like, oh yeah, we had our PPP loan forgiven. That's what it was. And it's like, so you didn't actually make any money? No, not really. So you have to do that. That's one of the things with just trying to find it with a screener is that you're going to find these numbers that look really good, and then you have to actually try to explain them. So I think that the fundamentals of the pillar that like it takes the most work to actually understand the information.
Yeah, absolutely. That's hey, nothing is easy, man. The more work you put in, the more profit you're gonna make. That's the bottom line of it. So you made
Mm-hmm.
a good point, definitely, about not just looking at those top line numbers, but digging in, reading the press releases, listening to the conference calls, reading the
Yep.
10Qs. That's all very important. Um, so, this is part, again, just as a reminder, the fundamentals is part of it. It is a very important part of it. But, I want to remind people, at least a story trading perspective, is that wherever stocks trade, right, that's the fair price. That's the fun that's where stocks should be trading. Right. Now stocks change every day. The prices change every day. That's not because markets are inefficient or they're chaotic. It's because information changes every day. Information which affects sentiment, both on a micro level for that stock and also a macro level. There's catalysts which come out, which impact the direction of the stock. There's technicals that are changing that can impact the direction of the stock. So all of this is important in setting that fair value price for it today. And fundamentals is just one piece of it. And I think that's something very important that people understand, because I think it's very, very dangerous to come up with a thesis that, hey, this stock should be worth 50% more than it is today because this is what the fundamentals say. I think it's a very flawed way to invest. You can get into a lot of trouble doing that. There's a reason why it's 50% below what your calculation says it is. And that's when you have to go and research and find out why is it 50% below where the math says it should be. And that'll help you understand if you want to make that investment decision or not. And that's how, to really incorporate fundamentals into the story trading and the four pillars is really the way to do it.
Yeah, I agree.
So, with that, we're gonna, keep it short today. Actually, have a holiday party here at our office that I got to run to. So, I think we covered everything we wanted to cover with fundamentals. We'll get this recorded as part of our series on Discover the Story. So, I appreciate your guys' participation today. We'll be back 8 p.m. on Sunday with a review of everything that happened in the prior week during our VIP community. And for the week, definitely sign up for our newsletter. We have a free newsletter you can sign up for just by going to our Twitter. So